Hello friends, welcome to learning sessions, and in today's video we are going to discuss about the bookkeeping and the accounting, a very important chapter for the basics of the JAIIB AFM. So if you are preparing for the JAIIB 2026, definitely you should be watching this video till end, and we are actually having a series of the videos over here where we are going to discuss all the four papers of the JAIIB. So whether it's be PPB, Principles and Practices of Banking, Indian Economy, Indian Financial Systems, Accounting and Financial Management for Bankers, or even the Retail Banking and the Wealth Management, will be discussing them all. And the video is there on daily basis at 7:15 a.m. in the morning. 5 days a week the class will be there, and if you are a premium member you'll be getting the access to all the PDF notes, all the previous year questions, case study videos, mock test, mega test, everything will be there. If you want to download the application is available free of cost. The link is on the screen, that is iibf.info/app. So simply download the application right now and start your preparation. I hope that you must have gone through the last two videos. If you have not gone through the videos, those videos are available on our YouTube channel now. But let me tell you, from this video onward, the video will be available during the streaming only, and after that it will be available just for the premium members or on the application only, right? So you need to download the application right now, that is available at the link iibf.info/app. So let's start the session over here. As I told you, it's related to the bookkeeping and further related to the accounting. So it is related to the bookkeeping and accounting. So I already told you, what do you mean by bookkeeping? Bookkeeping is actually related to what? That you are going to record all the transaction. First of all, we need to identify the transaction, then we need to classify the transaction, and further we need to have a accounts related to the transaction, right? So the one thing, first of all, it's done, it is related to what? It is the that we need to prepare the journal. So first of all, the journal entries are to be done. In the first case, what we'll be doing, what we'll be adding the entries to the book of original entry or the book of prime entry, and that is said to be the journal, right? So we are going to systematically record the transactions under the journal first of all, and we need to classify the accounts, like the account is nominal account, real account, or it's a personal account. We should be knowing about that. But before that, let's learn more about the books. So the book, as I told you, which is related to the original entry or related to the primary entry or prime entry, it is said to be the journal, right? Very basic book, we can say. So here is the detail of the books. One, we are having the journal, and on the other side we are having the ledger, right? So journal is related to what? Like you are having the purchase day book, sales day book, right? Return inward book, return outward book, general journal. Yeah, it's related to cash book. That's a journal. And when we look at the ledger, ledger is a specific account related to some specific entity. It could be related to some person also. Let's say case I specifically opened Ram's account. Now any transaction which would be having Ram in between, right? That transaction will go to that particular account, right? Same way, I'm having the debtor ledger where the all the transactions related to my debtors will be posted, right? So ledger is the second step. The first step, it's related to that we are to prepare in chronological manner. We are to record the transactions in chronological manner. That's a journal. So journal is a book of prime entry or original entry, whereas ledger is secondary entry, we can say. It's a secondary entry, right? We do first of all record in the book of journal. After that, we post it under the ledger into the different accounts, right? So we can say simply that if you're preparing a sheet related to the number of transactions in a chronological manner, it's a journal. But when we are picking up the transaction from that particular sheet and putting up specifically in the specific accounts there, right, that's a ledger, right? And as you can see that the cash book is available in both of the scenarios, whether it is related to the journal or whether it is related to the cash book, it is available in both of the cases. In both the scenarios, it is available. It's available under the journal also, and it is available under the ledger also. How it is possible, I'll be telling you all the details, right? So stay tuned. So first of all, we're going to discuss about the accounting cycle. we are going to discuss about the accounting cycle. Now, what do you mean by accounting cycle? What is accounting cycle? Accounting cycle is related to methodology, that how we do perform the performance, how do we perform the duties over here. That is accounting cycle. First of all, we are to record the entries, and those entries are to be recorded under the journal. Those are recorded under the journal. And once you have recorded the entries, now you are to post those entries into appropriate ledger account. That is said to be classification. That is said to be classification, that you are classifying it. So journal is just simple as like a sheet, right, where you are recording all the transactions, right? But then you post them specifically. The specific transaction is to be posted in the specific account. That is what, that is classifying, right? And the third step, once you have done posting, you'll be having the debit balance or credit balances of those accounts. Now you'll be posting, now you'll be having such balances in the trial balance, where you are having the account name, you're having either the account is having the debit balance or the account is having the credit balance, and you'll be writing down all the balances on the debit side, you'll be writing all the balances on the credit side, you'll be checking the arithmetic accuracy of those accounts, right? And that is what preparation of, that is related to the preparation of the trial balance. And once you are done preparing the trial balance, then you'll be preparing the final statements, like profit and loss account, balance sheet can be prepared out of it, right? So the step starts with the journal, leads to the ledger, after that trial balance and the final statements. This particular thought we have been talking from the very first video. I hope that you must have understood that how it works. So accounting cycle is nothing other than that we are going to record the transactions first of all in the book of original entry or the prime entry, that is a journal. After that, we are going to classify those particular transactions and we are to post those transactions in the ledgers. And after that, we are to prepare the trial balance, and once the trial balance is prepared, we are all good to go for the final statements, that is a balance sheet and the profit and loss account. Are you clear with it? Now, after that, it's related to the rules of journal. As I told you, there are multiple type of accounts. We are having the personal accounts with us. We are having the real account and we are having the nominal account. So there is a rule related to it. First rule, it's related to the personal account. Now, personal account could be related to a natural person, right? Natural person like Ram, Sham, Mohit, right? So any single person who is a natural person, right, for that particular person the account is open and that is set to the personal account. It could be a artificial person. Let's say the account is opened for a company, right? It is opened for a firm, it is open for an HUF. That is what, that is also a personal account, right? It could also be a representative personal account. Now representative personal account is like the salaries payable, the salary is outstanding, you can say, not payable, the salary is outstanding. Now outstanding word is indicating what, that this amount particularly is to be paid to those members. Let's say salary outstanding is there. Now I know this particular amount which is mentioned, let's say it is having an amount of rupees 1 lakh. Now this 1 lakh amount is not belonging to the company. This outstanding salary is outstanding, we can say salary is outstanding. Now this amount is not belonging to the company. This amount of salary is outstanding is belonging to the group of persons to whom the salary is to be paid, that is due, but we have not paid that and it is to be paid, right? So it is representing the group of persons, so it is representative personal account. It is representative personal account. So personal accounts could be of three types. It could be the natural person, it could be the artificial person, it could be the representative personal account. The second type of account, it is a real account. The real accounts are related to the assets. Those are related to the asset. Like it could be the tangible real account, it could be the intangible real account. If you can touch and feel the asset, it is a tangible real account, like cash balance, bank balance, like machinery account, right? So the things which you can touch and feel, that's a tangible real account. And the things, the assets which you cannot touch or feel, that's intangible real account, like goodwill, right? That's not, you cannot touch, you cannot feel it, right? That's a intangible real account. And the third one, it's related to nominal account. All the accounts which are related to expenses, losses, gains, incomes, Those are the nominal accounts. Those are the nominal accounts. Now in the previous chapter, previous video, I told you about the single entry system and the double entry system. Now the single entry system is not systematic, it is not scientific, but the double entry system is scientific, it is systematic. I told you about it, right? So whenever we do a transaction, there is a dual aspect in that particular transaction. The one leg would be related to the debit side, the other side would be related, other entry would be related to the credit side, right? I told you very much clearly. So those all concepts must be in your mind, right? So we have to follow these rules related to the accounts. For the personal account, the rule is debit the receiver and credit the giver. The person who is going to receive the amount is to debit. We have to debit that particular amount. Let's say you have given the amount to person Ramesh. You have given the amount to person Ramesh. In that scenario, what account will be credited or debited? Now the giver to whom we are giving, the giver is basically not the person who you are giving to, it's basically the person who is giving, right? That is us. We will be crediting our account and we will be debiting the receiver's account. So the Ramesh account will be debited because he has received the balance. Getting this point, right? And for real account, it is debit what comes in and credit what goes out. So if you're going to receive the cash, it is coming in. So in that case, the cash account is to be debited. But if you are paying the cash is going out. You are to credit the account. And for nominal account, whatsoever the debits are related to expenses and losses. So if there is any loss, any expense, we are to debit that account. But if there is any income, any gain, we are to credit that account. Getting it? So that's the case. So when we'll be solving the problems related to it, you will be able to understand these in detail. You will be able to understand all these in details then. Clear so far? Let's move further. After that, it's related to the format for the journal. This is a format for the journal. First column we are having related to the date, then the particular of the transaction, then the ledger folio. When you'll be posting the transaction into the ledger, you'll be writing the ledger folio, means ledger page number over here. That's the third column. For the debit amount, if the amount is debited, if the amount is credited, it will be the credit amount, right? So there are 5 columns in case of the journal. In case of journal, we are having 5 columns. One, it is related to date. Second, it's related to the particulars. Third, it's related to ledger folio, then debit amount or the credit amount. You need not to cram these things, but you should be having the idea related to it. The questions in the exam are not related to the format because it's not a subjective exam, but you should be having the idea related to things so as to make your concepts much more clear. Now let's move further. It's related to the ledger. Now the ledger is a book of secondary entry. It's a principal book of accounts. Now here you do post the transactions. The first transaction is recorded under the journal, but once it is recorded under the journal, the book of original entry, then after that you post it under the ledger, right? So it is a principal book of accounts. It's just like a book and you're having the multiple pages, and let's say every single page is related to some different account. So it's just a ledger, right? It's a set of account. It is a set of account, right? So all the accounts related to the business enterprises will be there. It could be the real account, it could be the nominal account, it could be the personal account, right? So the main purpose of the ledger is related to what? That all the transactions which we have previously written in the journal, which we have recorded in the journal, we now want to classify those transactions under the different accounts, right? So main function is related to that. We want to classify or sort out all the items which were there in the subsidiary books or in the journal over there under the appropriate account. And here is a format related to it. One side we are having the debit side and the other side we are having the credit side. So there are 2 sides. One, it is related to debit side. The left side is the debit side and the right side is the credit side. So under the debit side and credit side, we are having 4 columns each. We are having the date, particulars, journal folio and amount. So when you are putting a transaction over here, from which page of the journal you have put the transaction from, right? That will be mentioned over here. Let's say it's a page number 129, it will be mentioned over here, right? Amount will go over here, let's say 30,000. Now we need to write debit because we already know that it's on the left side, it is a debit entry, right? And we'll be writing the date and particulars over here. So we were learning about the ledger. So I was telling that the ledger is having the two sides, that is divided into two sides. We are having the left hand side, which is known as the debit side, and we are having the credit side, which is on the right side, right? So it is having the two sides related to it. Is it clear? So when we are talking about the ledger, we are having the two sides related to it, and the name of the account is written in between. So it is cash account, it is mentioned in between, in the very middle of it, in the very center of it, we can say. Not middle, it is mentioned on the very center of it. Clear so far? Then further, in case of the ledger, one thing is very much important, that is related to balancing. The balancing is to be done. So that's the process related to equalizing the two sides. So let's take the case that we are having the purchases account. Now purchases account is related to the expenses. So it will be what account? Kindly do answer at the earliest. Kindly do answer at the earliest. If I'm talking about the purchases account, it will be what type of account? It will be the nominal account, it will be the real account, or it will be the personal account. I clearly told you the hint, it is related to the expense, and all the accounts which are related to the expense or losses are what account? Those are the nominal accounts. So purchases account is again what? It is a nominal account. Okay. So let me just tell you about the point that I want to tell you about the balancing. So I'm having the debit side on the left side. I'm having the credit side on the right side. That was the case, right? Now let's say case that we are having the different entries. We're having the debit entries like 30,000, 20,000, 15,000, and on the credit side we are having the entries like, let's say 5,000, 12,000, 7,000. Now what will be the total of the debit side and what will be the total of the credit side? The total of the debit side would be equal to 30 plus 20, 50, 50 plus 15, 65,000. The total is 65,000. And the total of the credit side would be equal to 5,000 plus 12,000, 17,000, 17,000 plus 7,000, 24,000. Now which balance is the greater one? Debit side is greater or the credit side is greater? Definitely the debit side is greater than the credit side. And by what amount it is greater? It is 65,000 minus 24,000. Now it is greater by 41,000. Now when I'll be saying it is greater than 41,000 or whatsoever the amount it is greater than, right? On the shorter hand, I'm to write the difference. Now this side is greater than the credit side by 41,000. So I'll be mentioning 41,000 over here on the credit side so as to balance it out. So as to balance it out, I'll be mentioning the difference amount on the side which is smaller one, right? So I'm having the credit side balance is lower than the debit side. So I mentioned 41,000 amount over here. Clear so far? Right? And that would be the balance of the account. The side which is having the greater balance would be the balance of the account. So the balance of the account is 41,000 debit. So we can simply be saying that the purchases account is having the balance of 41,000 debit. This is called balancing. This is called balancing. Now let's read it out. So it means that we want to equalize both of the sides. We want to equalize both of the sides, and that can be done how? That we have to put the difference on the side where the amount is short. So if the debit side is exceeding the credit side, in that scenario the difference amount of the debit side and credit side is to be mentioned on the credit side, right? And this is called what? This is called the balance brought down. This is called the balance brought down. And when the account balance would be equal to what? It will be the debit balance. Like in the case of the purchases account, I told you the balance was what? The balance was the debit balance, right? Similarly, the case is, let's say the case when the credit side is greater than the debit side. Let's say case the credit side is 45,000 and the debit side is 30,000. Now the credit side is greater than that of the debit side. Now what is to be done? The credit side is greater than the debit side by 15,000. Now the 15,000 amount is to be mentioned on the debit side. It is to be mentioned on the debit side, and the balance of the account will be credit side. The higher side would be the balance of the account. The higher side will be the balance of account, but the amount will be the difference between debit side and credit side. So here the balance of the account is 15,000 credit, right? So whenever the account will be opened again, once the balancing is done, it means we are going to close the account, right? And the closing account balance is to be calculated. So here the closing account balance is 15,000 credit, right? And once the account will open, the side it will be carried toward it is credit side, and it will be having the 15,000 credit balance. Okay, so the following steps are to be followed. First of all, we have to take the total of the debit side and we have to take the total of the credit side. If the debit and the credit sides both are equal, it may also be the case, right? If both are equal, it means the account balance is already calculated, it is already balanced, it is already closed. But if the debit side is more than the credit side, it means we'll be having the debit balance. And if it is the credit side is more than the debit balance, then we will be saying it will be having the credit balance, right? And it's a wording that we write by like by balance carried down or to balance carried down. This is what we mention in the accounts whensoever we are to brought down the balances. So in the case we are having the debit balance or debit side more than the credit side, we do mention by balance carried down, by balance carried down on the debit side. And if it is on the credit side, we do mention to balance carried down, right? So we have to put the difference, like I told you, like in the case of I'm going to mention again, we are in the debit side, credit side, it is 7,000 on the debit side and 12,000 on the credit side. What will be the balance of account? Kindly do answer at the earliest. What will be the balance of the account? It is 5,000 credit, 5,000 credit. And the balance which is to be mentioned on the debit side now, the balance which is to be mentioned on the debit side now, it is 5,000 over here. We have to do the balancing now. So whatsoever the difference between these two, debit and credit, that is 5,000. That is to be mentioned the side which is short, that is on the debit side, that is on the debit side. And what narration we will be giving? We will be giving to balance carried down, to balance carried down. If it was the opposite case, like if we say that the debit side and credit side is there and we are having the balance of 24,000 over here, right? And let's say 20,000 over here. Now the debit side is more than the credit side. Now 4,000 is to be mentioned on the credit side. We have to do the balancing, and what narration is to be given? By balance carried down, by balance carried down. So when it is to be written on the debit side, we use the word to. When it is to be written on the credit side, we use the word by, right? Is that clear? Now let's move further. It's about like when we have mentioned the appropriate differences, when we have mentioned the appropriate differences on the side which was short, we have actually done the balancing part over here, and after that we are to done the total, and that is to be done, and that is done, right? Now let's move further. Now there is a exercise which is very much important, so as to understand the concepts, let's learn this particular exercise. Let's try to solve the questions over here based upon it. Right? So we are having the exercise related to journalizing and posting. So we'll be preparing the journal entries and we'll be posting it into different accounts. First of all, it's related to started business with rupees 1 lakh cash. Starting business with 1 lakh cash. It means what? That we are contributing the capital. It is related to contribution of the capital. So the two accounts will be involved. One, it is related to the capital account, and the other one, it's related to the cash account. So the two accounts will be involved, capital account and the cash account, right? So if we are to write the journal entry, what it would be. Now the capital account is a cash account is what? Cash account is real account. Why? Because cash is an asset. Cash is an asset. So cash account is the real account. Right? So what is to be done now? What was the golden rule for the real account? The golden rule for the real account was debit what comes in and credit what goes out. Now, being a business, if you are going to receive the cash, it is coming in. So the cash account is to be debited. So the cash account is to be debited. So we'll be doing what? We are to debit the cash account now. Is it clear? Kindly please confirm. First of all, go for the different type of accounts and do let me know that if you're clear with this point or not. I've already told you that there are three different types of accounts. We are having the personal account, nominal account, and the real account. And the cash account is what? Cash account is a real account. So the cash account is to be debited. So the journal entry would be related to what? It would be related to that we are going to debit the cash account. So cash account debited with rupees 1 lakh and to capital account. This is how do we write the journal entry. Right? So 1 lakh would be on this side. So this would be the first journal entry. Let me write the journal entry over here for you. So the first journal entry would be related to that we are going to have the cash account debited 1 lakh and to capital account 1 lakh. You need not to write credit with the second one. Right? Now the business started with the cash over here. The second one, it's related to second journal entry. Let's have a look at it. It says goods purchased for cash. Goods purchased for cash, rupees 30,000. Goods purchased. Now, when you are going to purchase the goods, it's the purchases account which will be involved and cash account is involved. Right? Purchases account is which account? It is nominal account. It is nominal account. And cash account is which account? Again, it is real account. Why purchases account is nominal account? Because it is related to the expenses. When you are purchasing something, you are doing expenses. So purchases account is a nominal account, whereas the cash account is a real account. What is the golden rule for purchases account? Debit all the expenses and losses. Purchase in expense. So we are going to debit the purchase account and you're going to pay the cash. Cash account is a real account and you're going to pay the cash. Cash is going out. And what is the golden rule for the real account? Debit what comes in and credit what goes out. The real account golden rule says debit what comes in and credit what goes out. So we are to credit the cash account. We are to credit the cash account. What would be the journal entry? The journal entry would be purchases account debit with the amount of 30,000 to cash account 30,000. Is that clear? Now, the third transaction. Goods sold for cash rupees 8,000. Goods sold. Yani ki we will be having the sales account. We will be having the sales account and cash account. Now sales account is again nominal account. Sales account is again the nominal account. Why? Because it's related to income or gains. And cash account is again real account. When you are making the sale, you're going to receive the money. Yes or no? So the cash account will be debited when you're going to receive the money. And further, sales account is revenue, your gain. So debit all the incomes, all the debit all expenses and losses, and credit all the incomes and gains. So the sales account is to be credited, right? So the journal entry would be cash account debit 8,000 and to sales account 8,000. Are you clear with this? And the last one, goods sold to Arnab, rupees 15,000. See, whenever a person's name is mentioned, it never means a sale in cash is made or purchase in cash is made, right? So in that particular case, the personal account is to be opened. Goods sold to Arnab means that the goods have been sold to Arnab on credit, right? Goods have been sold to Arnab on credit. If it was like that we have purchased a raw material from Arnab, it means raw material has been purchased on credit, right? That's the case. So goods sold to Arnab 15,000. So it will be sales account because we have sold the goods. So your sales account, and the second account would be the Arnab's account. These two accounts will be there. Now the sales account is a nominal account, as I already told you. The sales account is what? It is a nominal account. But Arnab account is what? It is personal account. It is personal account. What is the golden rule for the nominal account? Debit all the losses and expenses, and credit all the incomes and gains. So it is income, sale is an income, it is to be credited, right? And what is the rule for the personal account? Debit the receiver and credit the giver. You are giving the goods to Arnab, so the Arnab's account is to be debited, right? So what will be the journal entry? That Arnab's account is to be debited for 15,000, and the nominal account to sales is to be credited 15,000. So these are the journal entries so far. Are you clear with these journal entries so far? Kindly please confirm. Kindly confirm so that we can proceed further, because we are to now post them into the ledgers. We are to post these all 4 transactions into ledgers, and then we'll do the balancing too, so that you can understand these things easily. Okay, so first entry was related to the capital contribution. Capital contribution, right? So here, first entry should be related to what? If I'm talking about the first account, it's related to capital contribution. So capital contribution would be related to you're having the cash account, you're having the cash account and the capital account, right? So it should be related to that the cash was contributed to you. The cash was contributed to you, and the cash account is having the debit balance over here. So it is, when we are to mention on debit side, it will be like to capital. On debit side, we will be having to capital. Amount would be related to rupees 1 lakh, right? Just name it 1. The second 1 lakh would be related to the capital account. Now capital account is what type of account? Capital account is personal account. It is personal account because capital represents the owner. Owner is a person, right? So it is basically the personal account. So what is the golden rule for the personal account? Debit the receiver, debit the receiver and credit the giver. So we have to credit the capital account here. We have to credit the capital account, and the capital account would be saying by cash, because you have received by cash. So we can say by cash amount rupees 1 lakh. Is that clear? The second entry, purchasing, purchases account and the sale and the cash account. So the two side is to be written by, right? So we'll be having the cash account again, and it will be saying two sales or two purchases. What will be done? How you will be mentioning it? It will be by purchases. It will be by purchases. So you have to mention that amount, right? So second entry is related to have made the purchases. So it will be by purchases. In the cash account, we'll be having by purchases. What amount it is? For the second entry, it is 30,000, right? And the second would be related to purchases account. And in the purchases account, it will mention like to cash, amounting 30,000. Second number transaction. The third transaction is related to goods sold for cash. And what was the journal entry? Cash account and sales account. So it was a cash account and the sales account. So you will be having the third entry, two sales. And what amount did you receive? 8,000. Right? And the second leg would be related to the sales account. Now in sales account, you have to basically post on the debit side. You have to post on the debit side, na? So it will be like buy cash or credit side. It is credit side. Don't mix it. Buy cash amount would be 8,000, right? Further, the fourth entry, it says goods sold to Arnab. Now sold to Arnab, Arnab's account and the sales account. Arnab account and the sales account. Now in the case of Arnab account, you have to post the entry, and that will be on the debit side, right? And we'll be saying two sales amounting 15,000, right? And under the sales account, we'll be writing by Arnab 15,000. Right now we have posted all the four journal entries into the different accounts. Is it clear so far? We prepared the journal entries. We posted those journal entries. Now we have to do what? We have to do the balancing. Now just make sure so as to do the balancing very clearly. First of all, we will be doing the balancing for the first account, that is the cash account. That is a cash account, right? So the total is 1,08,000 here, and here the total is 30,000 only. Now which side is shorter? The credit side is shorter one. The credit side is shorter one. So it is 1,08,000 minus 30,000. That is 78,000. So the 78,000 balance is to be put on the credit side. It is to be there on the credit side, and we'll be saying it what? We'll be saying it to be balance carried down. We'll be saying it to be balance carried down, right? So the balancing is done now. And what will the balance of the account? It is 78,000 debit. The balance of the account is 78,000 debit. Now let's go to the capital account. Now the capital account, on the debit side we are having no particular, we are having no entry on the debit side. So we'll be saying the balance is 1 lakh credit, and balance carried down 1 lakh. Balancing is done. We have to pay the totals and the balancing is done, right? And for the third account, purchases account, balance carried down 30,000, and the balance of the account is 30,000 debit, right? And for the another account, sales account, the total is 23,000 credit, and here we are to balance carried down 23,000. So the balance is 23,000 credit. For the earn up account, the balance would be 15,000 debit. I hope that you must have understood the concept related to the posting, related to the journal entries and everything. Is it clear so far? Kindly confirm. Have you learned the concepts so far? Kindly please do post a like, and make sure to share the video among your friends and colleagues who are preparing for the JAIIB exam. Now, let's understand the difference between the journal and the ledger. Let's understand the difference between the journal and the ledger. So if we are talking about the journal, journal is what? Journal is a subsidiary book of the account. It is a subsidiary book of account, and we can say it is a primary book of entry, or we can say original book of entry it is, right? But if we're talking about the ledger, ledger is a permanent or final book of account. It is a primary, it is not primary, it is a permanent and final book of account. And in the case of journal, we record the transactions on chronological order basis. I already told you, based upon the dates, just date after date, you have to put the entries. That is your journal. Whereas in the case of the ledger, we do classify the transactions under the different accounts, right? And in case of the journal, we record the transaction without considering the nature of classification. We don't consider the different heads of account in case of the journal, whereas the heads are to be considered in case of the ledger, right? And in case of journal, we are having 5 columns. We were having the 5 columns. Which 5 columns were there? We were having the date, particulars, ledger folio, debit amount, credit amount. Those 5 columns were there in case of the journal. Whereas in the case of the ledger, we are having 2 sides, debit side and credit side. The debit side is on the left side, the credit side is on the right side, and each is having 4 columns. Each one is having the 4 columns, right? That was the case. And further, in case of journal, it helps us preparing the ledger. Out of the journal, we do prepare the ledger, and out of the ledger, we do further go for the trial balance. Trial balance can be prepared from the ledger balances only, right? So we have to put together all the balances, like we calculated the balances of the account, like the balance account is having the debit balance or the credit balance. Now I'll be putting all the balances under the debit and credit side under the trial balance, and we can check the arithmetic accuracy, and after that we can prepare the final accounts, right? Further, it says the total results of the transactions cannot be known from the journal. Very much important. You cannot be knowing the total of the results. It is not possible. But from the ledger, we can know the total of the particular account. We can know the total of the particular account. Like from the above example also, we can definitely be getting that which particular account is having what balance. We can know the total of the balances. In journal ledger, we are having the ledger folio, and in ledger we are having the journal folio, right? Reference to each other is being given. Preparation of trial balance is not possible from the journal itself, definitely not possible, whereas a trial balance is prepared from the ledger over there. Definitely it is the case. And you cannot be preparing the income statements at the end of the period from the journal, right? You cannot be preparing the same, but it is possible to prepare from the ledger balances. From the ledger balances we can do so. And transactions are recorded in the journal. What you basically look at, you look at a simple voucher and you prepare the journal entry for the same, and you prepare the journal entry for the same. And for preparing the ledger, the source is what? Source is journal. You do basically look the journal as a source when you're going to prepare the ledger. When you're going to prepare the ledger. And when you record the transaction in the journal, it is said to be journalizing. It is said to be the journalizing. And when we do post the transactions in the ledger, it is called posting, or recording the transaction in the ledger is said to be the posting. So that was why I was using the word from the very start, that in your you have to put the records in the journal, you're posting in the ledger, right? So we do post in the ledger, whereas in the case of journal, we record the transaction. It is said to be journalizing, right? Balancing cannot be done in journal because multiple accounts are involved, multiple transactions are just recorded in a chronological manner, so the balancing is not done and cannot be done. Whereas definitely the balancing can be done in the case of the ledger. And journal does not start with opening balance. It is not having any opening balance, but some ledger accounts start with the opening balance. Nominal accounts does not start with the opening balance, because nominal accounts balances are made zero at the end of the accounting year, right? But the personal accounts may be having the balances in the start, and the real accounts are having the balances in the start of the next year, financial year. Is that clear? So that is the difference between the journal and the ledger. That is the difference between the journal and the ledger. After that, it is related to the cash book. But this particular topic we will be starting in the next video, right? Because it's a again a lengthy one, and it's having an example with it. So I want to cover all at single pace, right? So we'll be covering that in the next video. So if you have liked the content so far, give this video a like and thumbs up, and make sure to follow us, subscribe us. And if you want to get the PDF of this particular file, you just need to WhatsApp me AFM updates. You need to write AFM updates and WhatsApp it to the number 83609 44207, right? And from the next part we'll be starting over here. So this would be related to the part number 2 that will be starting. So let me write over here. So this is chapter 3 and part 2, right? That will be starting from the tomorrow video. So that will be all. Thank you so much, and see you again in the next video. Happy learning.